Hello, everyone. Thanks for checking in. I'm going to check out what's going on with SPY. My name is Mark, and I am a former literal hedge fund trader. I'm not just making that up. I've actually traded directly for two of the best in the industry, Steve Cohen and Mario Gabelli. Not just in the industry, but two of the best who have ever lived. So I had the honor of trading for these guys. Mario hired me out of business school. Then I left there to go work for Steve. But when it comes to trading, there really isn't too much I haven't seen. And I know what real institutional traders look at because I was one of them for 20 years. So please check out my website, or our website, I should say, because I have some partners, stockmarketjobber.com, and join our community. There are a lot of things on the site that are not here on YouTube. We go over all kinds of trading ideas, historical education. We talk about SPY, other ETFs, options, commodities, ETFs. So make sure you to like and subscribe if you want to see more of an analysis. And hopefully, if you like it enough, you will come and join our site. All right, so let's just take a look at SPY. And now let's remember that SPY is the sum of its parts. All right. So this move, I will admit, caught me off guard. It was a pretty big, nasty reversal. But you know what? I'm wrong. You're wrong sometimes. The gurus on the financial media are wrong. What's never wrong is the charts. And this type of a reversal could have some follow through. This 390 level is important. And if you've seen our other SPY overviews, you'll understand why. Since May, this level has been resistance and support. It keeps converting back and forth. So we had a big sell-off today, or a big reversal, I should say. We opened up here. And we're pretty much back right down to this 390 level. We're at 391, and it's only a point away, and it's a $390 security. So you can basically say we're testing this level. Now, I think over the next few days, we either get a decent rebound or we get a sell-off. Either way, we're going to have a tradable move. But there's two things that concern me. The two biggest sectors in the market are technology and healthcare. And let's take a look at them. Remember, the S&P 500, it's 500 stocks, it's 11 sectors. If we look at these 11 sectors, it can give us insight into what's going on with the broader picture and give us insight into whether this is going to rebound or break down. All right, so in the institutional trading world, people don't worry about things you may think about that you may think they do. Like you may think the great traders have secret formulas or they use these complex trading methods. And that's really not my experience. The best traders just concentrate on levels, trends, and momentum and investment psychology. So that's the S&P 500. Let's go look at the technology sector. Now, this is going to tell us, I think, what's going to happen over the next few days. Technology is an important sector. Notice this level was resistance. This is the 129.50 level. What we're doing here is we're looking at the SPDR ETF. These are ETFs that track the sectors. This particular ETF tracks the technology sector. And again, there's 11 sectors, and different sectors drive the market at different times. They change like leadership positions. So resistance became support. This happens because of seller's remorse. People sell, and they thought they made a good decision, but if the market goes higher, like it did here, a lot of these sellers become remorseful, and they tell themselves, man, I made a mistake. I want to buy my shares back. But I'm only going to do so if I can get them for the same price I sold them at. So resistance can become support. Now we'll see we're right back at this important level. Okay, so in the market, some levels are more important than others. That's just how it is. And technology, which is the biggest sector in the market, is now at an important level. Important levels are like crossroads. When a market gets to one, it decides where it's going to go. They don't usually hang out at them for a long time. Like, look at this. If you're a trader, you could have traded this all day. Every time it got back to this level, we had a big move higher. So this is what I'm going to be focused on. And you should check back and just check us out every day. Every day we put out something on the S&P 500. So this is kind of iffy. We'll see what happens. But of concern is this healthcare sector. Now, this is the second biggest sector in the market, and the action here looks pretty weak. Okay, here once again we have resistance turning into support. So the action here looks pretty weak. Now, if technology sector can't hold that level and starts to go lower, I think the broader market moves lower. And now let's not be afraid of that. Let's think about what we can do to profit off of it. We could buy inverse ETFs. In other words, an ETF that goes up if the market goes down. If you're an options trader, you can start looking at some puts. Anyway, be sure to check back. Make sure you check out our site, stockmarketjobber.com. Again, I have a lot of experience, so I feel pretty comfortable with teaching people what really goes on in the institutional and hedge fund world. Everyone loves hedge funds, but it's the institutional trading world, because I was there for a long time. I was there for 2 decades. I mean, if I spent 2 decades as a mechanic, I would know a lot about fixing cars, right? If I had spent 2 decades as a carpenter, I would know a lot about being a carpenter. I spent 2 decades in the institutional trading world, so I know a lot about how institutional trading works. All right, everybody, that's it. Make sure you check back tomorrow. There's going to be some money to be made over the next few days, because it looks like the market's going to make a move, and I will talk to you soon.